Welcome to the AACFB's 2024 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenters today are Tom Casanova, Marty Dixon, Scott Woodring, and from AILCO. And AILCO is a funding source member of the AACFB. I'd like to thank them for their support of the association. And before I do introduce them, I'd like to go over a few things to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit the questions in the box and they will be answered by the end of the webinar. Please reserve the chat for communication between attendees. And if you'd like to ask your question verbally, you can hit the raise your hand feature. The entire webinar should take no more than 30 to 45 minutes. And for those of you who'd like to review it at a later date, it will be posted on the 2024 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I'll turn it over to the team. It is all yours.
Well, thank you, Monica. Thanks to AACFB, and thanks to everyone out there that is tuned in. We do not see pictures, faces, so we don't know who's tuned in. So hopefully somebody's out there listening to us. My name is Tom Casanova, and I'm with AILCO Equipment Finance Group. And we are located in a western suburb of Milwaukee, Wisconsin, and I work out of the home office here. The city is called Waukesha. And I've been with AILCO going on 3 years. And joining me today are Scott Woodring. Scott, you want to say hello?
Hello, everyone. Scott Woodring, Vice President of Sales at AILCO. I'm actually located in the Lincoln, Nebraska remote office. I've been with AILCO just over 2 years, and I've been in the industry for over 20 years. Worked at various funding sources from A to challenge credits, small ticket to large ticket, and now I'm here in my role at AILCO.
All right, thanks, Scott. We're also joined by Marty Dixon. Marty is not able to get his camera working, so he's called in.
Yeah.
And Marty, you want to introduce yourself?
Yeah, good afternoon, Marty Dixon. I actually am in the Chicago office, so I cover the metro area, and I've been with AILCO close to 15 years, and I'm about a 40-plus year veteran of the leasing equipment finance industry, primarily with bank lessors, and I started out my career actually as a commercial lender for a large Chicago bank. So, but glad to be a presenter, and hopefully we'll be able to answer any questions you have about us.
All right, thanks, Marty. So we want to get started by just letting you know a little bit about our geography and our limitations there. So if there's somebody on the call that is lending in California, New York, Alaska, Hawaii, and then 3 counties in Florida, Broward County, Palm Beach County, and Miami-Dade counties. We do not lend in those 4 states or those 3 counties. So if you're specifically working those regions, you can drop off the call because we're not going to be able to do any business with you. And then as far as asset classes as well, I wanted to mention those up front in case you are working in those asset classes. We don't lend in the following industries: aviation and marine, so planes and boats, anything that floats or flies, the gas and oil, energy, farming and agriculture, and cannabis. And we do lend in the OTR trucking space, but we are not looking for any new brokers in that space right now. We are full right now, and a little bit more cautious in that space. Marty or Scott, do you want to add anything right away?
Yeah, I'll add to that, Tom. So regarding California, New York, at this present time, we're not able to work with California brokers or New York brokers, even if the deal's outside of the state of California and New York. So I just want to clarify that.
All right, thanks, Scott. So we'll get started with the presentation. What sets AILCO apart?
Yeah, I'll say something here. I think the first thing really is we kind of pride ourselves on being a common sense lender. That's our kind of our tagline. So we're not running deals through credit matrix or computer scoring model. All of our deals are looked at individually by an actual real life analyst. And what we really strive to do is try to find a way to get the deal done. So if that means deviating slightly from the original submission and coming back with an alternative structure, whether that be shorter term, slightly higher rates, bigger down payment, or what have you, then we will try to get that done. So just want to stress that we're just looking at the deal. Does this make sense? How can we make it make sense?
All right, and creative solutions? Scott?
Yeah, I mean, I just touched on that kind of, again, we're going to try to find a way to get the deal done, whether we have to, change the structure as it was originally submitted or not. So again, different rate, more down payment, maybe some type of, 3 payments in advance, something like that. So just trying to put our heads together on our side to try to get the deal done for you guys. Yeah,
and we always appreciate the story. If there's a story behind the deal, we want to hear it so that we can pass that on to our credit team. Anytime there's a story that explains a certain aspect of the deal, that's definitely going to help. Private party financing, Marty, you want to touch on that a little bit?
Yes, I have quite a bit of experience in financing private parties. We actually can finance where the private party is either a company or an individual, and we would define that as a non-vendor, some entity that's not in the business of selling equipment, is selling an asset. We're really good at it. We've been doing this a long time. The only added steps that we take with a private party sale is that we do run searches, even if it's an individual. We run a search on either the company that's selling it or the individual. And so we need a license up front to just confirm that. And on occasion, there is a lien on it. We have a one-page asset release for that asset, but we've done a lot of it. So it's a pretty, very user-friendly process to the brokers. Also, soft cost. I'm going to cover that. We don't have a formula where when we look at a transaction, we will only do a certain percentage of soft costs. With the right credit, we'll do a very high percentage of soft costs. So we look at the credit as compared to the collateral, and because of that, we can do a high percentage of soft costs and still get a transaction done in a good way.
Thanks, Marty. And we are a non-bank direct lender since 1997. We actually were in business under a different name before 1997. We've been around for a long time. We hope to be around for a good long time moving forward as well.
Yeah, back to 1972, I believe.
1972, right?
Yeah. Mm-hmm.
Protected relationships for brokers. We really rely on the broker community to partner with us and bring us opportunities to lend. And we never will go against a broker and break that customer bond that the broker has with the customer. So oftentimes we'll get reach out directly from a customer. We immediately go right back to the broker to make sure that they're in the loop.
One of the positive things I think we bring to a relationship is that we do not require you all to sign a broker agreement or commit to a certain amount of volume percentage. We're appreciative of any transaction you give us, and we realize that you submit it to us, it's on us. We do the credit work, we do all the due diligence. We're not holding you to a transaction by a warranty or a reps and warranties or an agreement.
Thanks, Marty. I'll talk about startups briefly. So the key with us when we're looking at startups is liquidity. We will consider a day one startup, but what we're looking at is obviously the credit has to be there. We like to see 700 or above CVR scores, but we're going to look at their liquidity position. So we're typically going to get a down payment of around 20%, and we want to see liquidity to cover that, as well as 3 months working capital and 12 months of what their EFA payment would be. And so, and those have to be liquid assets. So they have to, a lot of times I'll get a deal and it'll be someone will include their 401k or something like that. We don't consider that liquid. There's obviously penalties when someone tries to cash in 401k, and we really don't want to mess with people's retirement accounts. So we're looking at things like we want to see bank accounts, money market accounts, highly liquid assets to cover those startup costs that we see.
And then the unique funding capability, we've talked about a few of those items already. We do used and new equipment. I'm going to say at least 50% of our transactions are covering used equipment. Would you guys agree on that?
Yeah, I would
Very
agree with that.
percentage.
Yeah, and on the used equipment side, we're looking at those on a case-by-case basis too. Does it make sense? You know, we're not gonna do a deal probably for sale lease back or something like that on 3-year-old servers. That just wouldn't make sense really. But a 30-year-old piece of construction equipment might make perfect sense. So if you have a deal with used equipment, just run it by any of the 3 of us and we can ascertain whether that would be a fit or not.
Yeah, and we do up to 100% financing in many cases. Again, it's on a deal by deal basis. And as Scott mentioned earlier, we look at every deal individually, but we often do 100% financing. Same day decisions. We will get back to you the same day as long as we have all the information by noon. But you'll hear back from us one way or the other. Oftentimes, as you know out there in the community, that there's going to be documents that we're going to request. So we'll get the decision as quickly as we can. We pride ourselves on getting back in a timely fashion.
Yeah, I'll go back to that, Tom. So yeah, if you get everything to us in the morning, decision that same day. If you get everything to us by the afternoon, then allow for about 24 hours typically.
And here we're talking about our deal size, 10,000 to 500,000, and we have gone larger. Again, just case by case basis. We do app only up to 100,000. We are experimenting with 150,000 with some of our brokers right now. And I think by the end of the year, we'll have a pretty good feel as to whether or not we're going to increase that number to 150. And we do app only up to 75 for startups. So that's pretty good.
I'll add to this. I'll add to the application only levels. Tom said we're looking at moving it up to 150, but even on deals up to 100, we still need to have bank statements unless it's under 25,000.
Yeah, and we're going to talk about the parameters coming up here quick. You can see our credit appetite, 650. But again, if there's a story and it's below 650, we're open to hearing the story. And we do corp only deals too. We've already talked about our geography. And we've already talked about our industry types and equipment types. Scott or Marty, you want to add anything or should we go on?
We can
go for it.
All right, credit parameters. So for existing businesses, 2+ years time in business, less than 25, we're just looking for a credit app, a quote or an invoice, and then a CBR showing 650 for all the guarantors. Between 25 and 100, we got the app, we got the invoice, we got the CBR, but then we're going to ask for the bank statements that Scott just mentioned. We're looking for some liquidity there. And then over 100,000, we're going to look for tax returns and interim financial statements. And then again, the bank statements.
I'll say that, the 650 score for all PGs, if there's a history of, collections, charge-offs, even a past BK, it's probably not something we can overcome unless there's a pretty good story. Just don't want to see people with showing a history of negative payment trends.
Just to comment on what kind of goes on behind the scenes in the credit process. We will then take this information, the app, and we'll run a paynet on every transaction we can. And the goal there is to make sure they pay corporately they pay the bills on time. And we're looking for comp credit to some degree. So that's probably a large portion of the credit decision is comparable credit with other lenders.
Thanks, Marty.
Thanks, Marty. And then we do startups. We like helping businesses get off the ground. So less than 25, we're looking for 700 on the CBR. We're going to look at the bank statements, and then we're going to ask what kind of experience they have. And then between 25 and 75, we're going to look at the liquidity, meaningful down payments that could be up to 20%. And then we're going to look for 12 months of payments in the bank, in an account. And then we're gonna look for working capital, and the working capital, it's a moving target on that one, but that gives you a general idea of for between 25 and 75, what we're looking for. And then over 75, we're gonna add the tax returns, personal tax returns, or if the business has been around for over a year, we'll look for the business tax return as well. And then we're gonna look for a personal financial statement. We're gonna look for a business plan. And then again, we're gonna verify liquidity. Scott or Marty, anything?
I think you covered it well.
I think
And that, we wanted to keep it short and sweet so we'd have plenty of time for questions. So let's open, if it's okay, Monica, we could open it up for questions.
Yes, and just as a reminder, put your questions in the Q&A box and we'll get them answered. We'll give it just a second. And again, if you prefer to ask your question verbally, you can raise your hand, click the raise your hand, and I can unmute you. Otherwise, go ahead and put your questions in the chat or in the Q&A box, and we'll get them answered. And they have their information, contact information up here. We are recording, so this will be on the website and on our YouTube channel. So if you can't think of a question now and you have one later, this information will be available. Looks like we have a couple questions coming in. Do you guys want me to read them or you want to read them?
Go ahead and read them, that's fine.
Okay. Rod's asking for a rate range.
Who is it that's asking? Who is it? Rod?
Yeah.
Thanks for the question, Rod. So for existing businesses, we start at 11. And for startups right now, we're starting at 12. And again, it's each deal is looked at individually as we previously discussed. So we'll assign what we think is an appropriate rate to that deal. But we're not going to go higher, at least my experience since I've been here, higher than 13% on any deal.
Okay. And Aaron said he came in late. He said, do you finance trucks and what extra rules are there?
Do we finance trucks and what extra rules are there?
Yeah.
So we do finance trucks. We're not looking for any new brokers in the over-the-road trucking space right now, but we are actively financing trucks. We are looking for a minimum fleet size of 10, and we're looking for time in business 2+ years, and we're looking for companies that are proven profitable.
Yeah, and we will do vocational vehicles and specialty vehicles. When it comes to vocational and specialty, there's no fleet requirement.
Yep.
So I know that you're not taking on new brokers for over the road. Does that include the other types of trucks that are not over the road?
No, we'll take on a broker if they're doing vocational or specialty.
Okay. Just wanted to clarify that.
Thanks, Monica.
Mm-hmm. I'm not seeing any other questions. We'll give it just another minute. And while we're waiting, is there any parting thoughts that you guys thought of that you want to?
Yeah, I mean, there's been some stress in the funding industry recently. We are a solid company and we're not going anywhere. So we're looking for good partnerships with brokers. We really value we look at it as a true partnership. From start to finish, we're pretty honest with the way we do business, and we're looking for people that, we can trust and work, side by side with. If a deal goes bad, is the broker going to be there to support us? We're really looking for that partnership. Scott, Marty, I don't know if you want to add anything to that.
Well said, Tom. Looks like maybe some more questions came in, Monica.
Yeah, and the one was a clarification on vocational. What is your credit card usage rules as far as available credit goes?
They're looking for how much revolving is available.
Yeah, I'm not sure. This is credit card usage rules. I guess if they're
I don't think there's any hard and fast rule. Marty, what's your experience been there? Anything?
I think some funders will only lend if there's a certain percentage of revolving debt on the personal report. They cap it at a certain amount. So we don't really do that. They look at
we don't have
we don't have those kind of hard fast rules.
Yeah.
Yeah,
The
they'll
answer
look
is
at the report.
Go ahead, Marty.
Go ahead, Tom. I have to say, they look at the reports. And really, the key in our process is payment patterns. If the companies and the people pay their bills through the PayNet or the credit report, that's the primary thing we're focusing on. And I never really have had a lot of feedback on percentages of debt or it. The only thing that does come up, and this does, and it's a valid concern, is when they pull reports and it looks like the customers are loading up on debt in a very short period of time. That's a red flag that they will explore more. So if for years they hardly had anything, and then all of a sudden they have $1 million of new loans, that becomes kind of a point we have to look into. But the percentages is never really, I've never really experienced a concern with those.
Yeah, I haven't either.
Great. Well, I am not seeing any other questions, so we will go ahead and wrap up. I want to say a big thanks to all our participants and especially our valued funding source member, AILCO. And thanks for a great job, everybody. We invite you to meet with AILCO in person at the Commercial Financing Expo coming up this September in New Orleans. It's coming up fast, and we're looking forward to it. And with that, I will wrap it up and we'll say have a great day.
Thank you.
Thank you.
Thanks, everybody.
Thank you.